I. Introduction: The deception of net worth. For many, the ultimate measure of financial success is a high net worth. We are conditioned to believe that a soaring balance sheet filled with impressive assets automatically equates to security and freedom. Yet this singular focus can be a profound and dangerous pitfall. A high net worth, on its own, does not automatically translate into actual financial security. It can, in fact, be a deceptive metric, masking underlying vulnerabilities that only reveal themselves when true financial resilience is tested. This brings us to a critical concept: phantom wealth. Phantom wealth describes those impressive assets that look formidable on paper, but fail to translate into accessible funds precisely when they are most needed. It is the illusion of riches, a mirage that can vanish or become inaccessible in times of crisis, leaving even the seemingly wealthy in a precarious position. Understanding this distinction is the first step toward building genuine, unshakable financial security. 2. Mark's cautionary tale: prioritizing net worth over cash flow. Consider the cautionary tale of Mark, a real estate mogul who, by all conventional measures, had achieved extraordinary success. He had meticulously amassed a multi-million-dollar portfolio of properties, a testament to his ambition and perceived financial acumen, and his net worth was undeniably vast, a figure most investors could only dream of. Yet Mark's eventual financial ruin stemmed directly from a fundamental miscalculation: his unwavering prioritization of net worth over the vital flow of cash. He aggressively leveraged his initial investments, using debt to acquire more and more properties, each addition seemingly inflating his paper wealth and boosting his net worth on the balance sheet. However, many of these properties generated little to no positive cash flow, or worse, were cash flow negative after expenses. Mark, blinded by the continuously rising value of his portfolio, largely ignored critical warning signs: escalating operating expenses, increasing debt service, and the potential for economic downturns that could disrupt his carefully constructed empire. His focus remained solely on the appreciating value of his assets, convinced that their ever-increasing worth would always provide a safety net. Then the inevitable crisis hit. A severe storm damaged several of his key properties, and simultaneously, a significant number of his tenants defaulted on their rent payments. Suddenly, Mark faced a cascade of immediate, unavoidable expenses: repair costs, property taxes, insurance premiums, and mortgage payments. Despite his vast net worth, he lacked the necessary liquid funds to cover these obligations. He scrambled to secure a loan, confident that his multi-million-dollar portfolio would serve as ample collateral. To his shock, lenders focused not on his high net worth but on his poor cash flow. They saw a portfolio that consumed capital rather than generated it, a high-risk proposition regardless of the paper value of the assets. Mark found himself in an impossible bind, his wealth tied up, inaccessible, and profoundly illiquid. He was ultimately forced to consider selling assets at a significant loss in a down market, a devastating blow to his once impressive empire. His vast wealth, once a symbol of freedom, had become a cage, trapping him in a cycle of debt and distress. Mark's story is a stark reminder that net worth, without the bedrock of cash flow and liquidity, is merely an illusion. 3. Crucial lessons to avoid financial ruin. Mark's experience, while extreme, offers invaluable lessons for every investor, entrepreneur, and wealth manager. To avoid similar pitfalls and build genuine financial security, 3 crucial principles must be embraced. These are the pillars upon which true wealth is built, far beyond the deceptive allure of a high net worth. Lesson 1. Cash flow is king. The first and most paramount lesson is that cash flow is king. Prioritizing positive cash flow is not merely beneficial, it is absolutely essential for financial survival and sustained growth. Cash flow provides the necessary funds to cover all expenses, from operational costs to personal living expenses, without needing to liquidate assets. It is the lifeblood that enables you to weather economic storms, absorb unexpected shocks, and navigate market fluctuations with confidence. Unlike net worth, which is a snapshot of the past, Cash flow is a dynamic, sanity metric that predicts your future survival and capacity for growth, ensuring your financial engine is always running and providing the fuel you need to operate and expand. A healthy, consistent, positive cash flow allows you to seize opportunities, make strategic investments, and avoid the desperate measures that often accompany a lack of accessible funds. It is the true indicator of financial health, far more reliable than a static balance sheet. Focus on generating more cash than you spend, consistently and reliably. Lesson 2. Liquidity is essential. The second crucial lesson is the absolute necessity of liquidity. Maintaining a significant cash reserve is not a sign of missed investment opportunities. It is a strategic imperative. An emergency fund acts as an indispensable buffer against unexpected costs, market downturns, and personal crises. Liquidity protects you against the volatility of market fluctuations, ensuring you are never forced into a corner. It allows investors to avoid forced sales of assets at unfavorable prices, a common trap for those who are asset-rich but cash-poor. When markets dip, those with liquidity can buy. Those without are often forced to sell. For investment portfolios, particularly those involving real estate or illiquid assets, sufficient cash reserves are non-negotiable. A robust rule of thumb is to hold enough cash to cover at least 6 months of operating expenses, debt service, and taxes for your entire portfolio. This strategic reserve provides the breathing room needed to navigate unforeseen challenges without compromising your long-term financial goals. Liquidity provides optionality and peace of mind, the freedom to act on your terms, rather than being dictated by external pressures or market whims. Without it, even substantial assets can become a liability, as Mark discovered. Lesson 3. Stress testing your investments. The third vital lesson is the practice of stress testing your investments. It is not enough to project best-case scenarios. True financial resilience comes from analyzing how your investments would perform under adverse conditions, identifying vulnerabilities before they become catastrophic. Consider scenarios such as rising interest rates, which could dramatically increase debt service costs, decreased occupancy rates in real estate, or a significant drop in customer demand for a business. What if a key tenant defaults or a major repair is suddenly needed? By rigorously stress testing your portfolio against these potential shocks, you can identify weaknesses and implement corrective measures proactively. Diversifying income streams, building larger cash reserves, or restructuring debt. Stress testing builds a truly resilient portfolio, one not merely designed for good times but engineered to withstand market volatility and chaos. It transforms your investment strategy from a hopeful gamble into a robust, anti-fragile system. This foresight allows you to prepare for the worst, ensuring that your financial fortress remains impenetrable even when the economic landscape becomes turbulent. It is the ultimate act of prudent risk assessment. IV. Conclusion. Building true financial security. The illusion of net worth can be a powerful yet dangerous siren song. While a high net worth may appear impressive on paper, it is merely a static snapshot, often masking the true fragility of one's financial position. True wealth, genuine financial security, lies not in that impressive number alone. It resides in the dynamic ability to access and utilize funds precisely when they are needed most, built upon a foundation of cash-flowing assets that ensure a steady stream of income covering expenses and providing surplus. It is fortified by robust liquidity, offering a buffer against the unexpected and the freedom to act strategically. And it is protected by prudent risk assessment through the rigorous practice of stress testing, ensuring your financial structure can withstand the inevitable storms. By embracing these principles, investors, entrepreneurs, and high-net-worth individuals can move beyond the deceptive allure of phantom wealth, and instead build a financial fortress that is not only impressive on paper, but genuinely resilient, accessible, and empowering in every circumstance. This is the path to true and lasting financial security. If you found this valuable, subscribe for more insights that can protect and grow your wealth.